You ever look at the market and just scratch your head? I mean, a day where stocks are tanking and for some weird reason oil prices are dropping right along with them. It just doesn't feel right. Well, today we're going to unpack that exact kind of confusing day, and we're going to do it through the eyes of one investor who really thought he had it all figured out.
So let me introduce you to Hung. He's pretty new to investing, and for the last few weeks, he has been on top of the world. His portfolio? Just a beautiful sea of green. He'd poured his savings into some big US tech names, like Nvidia and Oracle, and watching them just climb and climb, well, he felt like a Wall Street prodigy. The market was on a tear and Hung was riding that wave perfectly.
But, the market has a funny way of keeping everyone humble, right? That amazing, euphoric feeling of being a genius, well, it was about to be replaced by a very cold, very hard dose of reality. And it was all delivered in a sudden, brutal flash of digital red.
Now, to really get the shock he felt, you have to understand the high he was coming from. I mean, the day before, everything was perfect. He literally went to bed dreaming of those green numbers, probably thinking about a new car or maybe even an early retirement. He was living the absolute dream.
And why wouldn't he be dreaming? The Nasdaq had just smashed through a historic barrier, crossing 23,000 points for the very first time. I mean, records were being broken all over the place. The momentum just felt completely unstoppable, which of course fueled his confidence that, hey, this is the new normal.
So the next morning, he rolls over, grabs his phone, opens his trading app, and his heart just sinks. The screen is a blaze of red. The Dow has plunged over 243 points, and those record-setting indexes, the S&P 500 and the Nasdaq, they're right there with it, deep in the red. The genius from yesterday is officially the panicked investor of today.
Okay, so he's scrambling for answers, frantically scrolling through the news feeds, trying to figure out what on earth is going on. And one phrase keeps popping up, over and over. Something he'd heard about but kind of dismissed, U.S. government shutdown. And this is the question that hits every single investor at some point, right? How can some political fight happening thousands of miles away reach directly into my app and just drain my account? It feels so disconnected. But as he was about to find out, it's all part of the same incredibly complex machine.
So what's happening here is this classic domino effect. It all starts with political gridlock. Lawmakers can't agree. That forces a government shutdown. All of a sudden, crucial public services like the IRS or even the FAA, they just grind to a halt. That creates real-world chaos, like flight delays. And that chaos creates a huge wave of economic uncertainty. So what do investors do when they get uncertain? They sell. It's a chain reaction.
But here's the thing. It wasn't just about the shutdown. As experts like David Wagner were pointing out, the market had been white-hot for a while. Think of it like a sprinter who's been running flat out for way too long. Eventually, they have to stop and catch their breath. The shutdown news, that was just the perfect excuse for the market to finally take that painful but maybe necessary rest.
All right, so Hung is feeling a bit bruised, but at least he kind of understands the stock situation now. He steps out to grab a coffee, but the market isn't done teaching him lessons for the day. A chat with his wise retired neighbor, Bak Long, is about to throw him a second, even more confusing puzzle. And this is the paradox that really just blew his mind. I mean, we are all taught one basic rule. Conflict in the Middle East, a huge oil-producing region, makes oil prices go up. But here he is, looking at the news, and despite all the ongoing tensions, oil prices were falling, sharply. It just defied all conventional logic.
And we are not talking about a tiny little dip here. Brent crude was down over 1.5%, and WTI crude was down even more than that. Now for Hung, who had also put money into energy stocks, thinking they were a safe bet against all this geopolitical turmoil, well, this was like a second punch straight to the gut.
So here is the secret, the crucial insight his neighbor gave him. The market is a forward-looking machine. It doesn't just react to what's happening today, it's constantly trying to price in what it thinks will happen tomorrow. The big price drop? It wasn't about the current conflict, it was about the expected end of it.
And there it was, tucked away in the news, the one critical piece of information Hung had completely missed. A ceasefire had been reached. So while most of the world saw a positive sign of peace, the oil market saw something different, a sign of much, much lower risk. And this brings us to the absolute core lesson of the day. To really get why good news about peace made oil prices drop, we have to understand this concept that is baked into the price of pretty much everything. It's called the risk premium.
So essentially, when there's a risk that, say, a war could disrupt the flow of oil, the market adds a little extra to the price. Think of it like an insurance fee. For weeks, the price of oil wasn't just the price of oil, it was the price of oil plus this big insurance fee for the conflict.
Backlong used his perfect analogy. He said, imagine you're shipping a fragile package down a really dangerous road. You'd pay an extra insurance fee, right? Well, when that road suddenly becomes safe, you don't need to pay that fee anymore. The conflict was a dangerous road. The ceasefire made the road safe.
And poof, just like that, the market stripped that insurance fee right out of the price. And that's what caused the sudden drop. The price wasn't crashing, it was just repricing the oil to reflect a brand new, less risky reality. For Hung, it was a total aha moment.
So, what can we all take away from Hung's very bad, but you have to admit, very educational day? Well, his experience actually gives us a pretty practical playbook for how to navigate these market storms ourselves.
You know, the key here is preparation. You have to build that steel mentality before the market drops, so you're not making decisions based on pure panic. You've got to read the news like an analyst, trying to find the why, not just the what. Understand that risk is priced into everything. And of course, diversify so one storm can't sink your whole ship. But most importantly, treat every loss not as a failure, but as tuition that you just paid for a priceless education.
This right here is a fantastic little cheat sheet for the next time you see the market acting weird. A sudden drop after a long rally. Just remember, volatility is normal. Distant political news shaking things up. It's all connected. An asset's price dropping on what seems like good news, look for that risk premium that just got erased. And that gut-wrenching urge to panic sell? Recognize it for what it is, pure emotion, not strategy.
And that's really the ultimate lesson here. Hung started his day thinking he was a genius, and he ended it realizing the real goal isn't to be a genius at all. It's to be a student, a humble, curious, and diligent student who understands that the market is the greatest teacher there is, and it never, ever stops offering lessons.
So I'll just leave you with this question to think about. We've all been there, right? We've all had our own Hung moments. So what's the most powerful piece of wisdom that you've ever gained, not from a big win, but from a tough loss?